G'day guys, how's it going? It's Reese from Reese's Pieces here, and today I'm going to be bringing you my thoughts on Bitcoin for the next week. It's probably not going to be my most exciting video because there's not really any trades that I see likely to come off in the next couple of days especially. We were really fortunate last week while I was recording my short order filled, and that went pretty well. But the two trades that I am seeing right now, I honestly don't really expect the entries to get hit until potentially next week, if ever. So, it's not necessarily going to be, oh, here's a good trade for this week, but I think it's a really important video because it encapsulates a lot of my sort of higher level concepts that I use in my trading. Things like minimize risk, maximum reward, not forcing trades, waiting for the right trade, a lot of those sort of ideas. So I'm a big believer in if there's not a trade that you like, if there's not a trade that fits your trade plan, sit on your hands, do nothing. And especially over the next couple of days, that's how I see it. There's nothing I like, there's nothing that suits my trade plan. I'm going to be sitting on my hands. So what we'll do is we'll head to Tradingview and hopefully you guys can get something out of this video. So here we are, we're currently looking at Bitcoin on the weekly chart. Like I've said before, I always like to start on the weekly, get a really big picture view of what's going on. So these are my current weekly zones. We've got a demand zone down around 34,500. Supply zone up around, I think that's about 56,000. Yep. And those are my fibs because I've drawn them on this move up there on the weekly. And this upper trend line I've drawn on the line charts based on the candle closes. I always like to draw my trend lines based on line charts, based on candle closes. It just helps bring a bit of objectivity to something that's inherently subjective, right? You'll often see different people will draw trend lines different ways. The same person might draw a trend line two different ways 2 days in a row based on the exact same data. I like to have a rule for how I draw my trend lines because that way it keeps things consistent. It's always the same way. And for me, that rule is line charts. Candle closes just gives a little bit of objectivity to that sort of trend line drawing. So at the moment, there's not a whole lot I'm seeing on the weekly. We've sort of formed a lower high here based on that high, but then we've also formed a bit of a higher low here. So a bit of a ranging market at the moment, which seems to be the theme. That's sort of what I'm seeing on the daily as well, is a ranging market. We haven't created new structure. We haven't broken this high on the daily. We have wicked through the entire zone, so that's a bullish sign in my opinion. There was previously a supply zone here, especially on the 4 hour, and the fact that we've pierced that makes me think that we are likely to see this zone up here around the $52,000 mark. So I do think there's a good chance price is heading up there. Do I think it's going there today? Not likely. But that's currently where I'm seeing a target on the daily, if you're in along. I think that's about it on the daily. There's not a whole lot there. I've drawn my fibs on this move here, right? The pivot from there to there. That's pretty much it on the daily. But if we come down to the 4 hour, this is where things start to get interesting. So let's actually put the dailies back on. We'll turn off the daily fib so it doesn't get too messy. This is how I'm currently seeing things. So there is a 4 hour level, there's two 4 hour levels, right? Two 4 hour sort of EQ levels. Now, I'm not a big horizontal level trader in terms of EQs. I love to trade supply and demand. I'm not huge on, your support resistance, your EQ levels. What I think is most likely to happen right now is probably come down to this 4 hour level, bounce, maybe something like that. Certainly, I think the most likely over the next, couple of days is come down to this level, bounce. Whether we break that level or not, don't know. We'll see. But something like that I think is reasonably likely, and the reasons for that are we're currently getting bearish divergence. If you come down to the CCI, you can see that. So there's a bit of bearish divergence. We've had a huge move up with no retracement, so we have to be due for retracement at some point. We've done 20% with really no pullback. So I do think it's likely we'll pull back a bit. But like I said at the start of this video, just because I think it's most likely that we are going to come down here and bounce, I would not take a trade from there. That to me is a really high risk, low reward trade, right? My stop loss, I like to use like market structure or zones for my stop loss. There is no market structure until back down here. So if I was to take a long off that level, I'd have to be something like that. If I did use that first zone, something like that. That's a monstrous stop loss. And because I'm targeting, even if I'm targeting this higher level, that's a pathetic risk to reward. You'd never catch me taking a trade like that. So even though that's what I think is the most likely scenario, that's not a trade that I'll take. It's not a trade that suits my trade plan. The trades that do suit my trade plan, I don't think are super likely to come off, but if they do, then they're super likely to be profitable. So that's the kind of trading that I like to do. Now, the two trades I'm seeing at the moment, let's just focus on, we'll go for the short first. Hopefully my computer doesn't die before we finish recording. But if I am right, if we do come down, bounce, head up, I think this level here is likely to provide a really good level of resistance. It's a daily supply zone. It's a daily EQ level. That's what that red line is. And there's a 4-hour supply zone right at the very top of it. We can take a really fat risk to reward trade from there. Now, our targets, it's sort of hard to pick them at the moment because ideally I'll be targeting demand zones that we create. If we do retrace, create a demand zone and then head up, that's where I'd be targeting. Let me just get rid of all my brushes before this gets absolutely shockingly messy. That's what I'll be targeting. But for now, I'm just going, all right, there's a daily EQ level through here that I've just accidentally moved. That's a good target. Even if I just target these 4-hour levels, right, that's still a really good risk to reward. So I have plenty of targets through there that I'd be quite happy to target. And it's a really good place to be going short, right? It'll be after a big run up. I'm a big believer in, selling high, buying low. And price will be high, I'll be trying to sell. So that's a short that I really like. But again, it might take a full week, maybe even longer before price gets there. It may never get there, like I said before. So that is my short trade that I'm considering. The long that I'm considering, I really like the look of. We've just had this big bullish move up. We have actually created a new market structure on the 4-hour because we have closed above, actually we'll use this tool, we've closed above this high. Oh, that was not what I wanted to do, but anyway. Right, this high here, we've actually closed above it. To me, we've created a new market structure, so we have a higher high. And especially if you're looking at these highs, we've definitely created a higher high. So what I always think when we have a higher high is, all right, I want to be buying the next higher low. I want to be getting in on the good market structure rather than buying the higher high. Now, like I said before, I think the higher low is probably more likely to form around here. But if we are to come back down to this area, around the 44K mark, there's a lot of reasons that I'm bullish. There are two demand zones that we've created on the move up. There's the 61 fib. There is the 50 fib up here. I wouldn't be buying off that because it will just sort of skew my risk to reward a lot, but it, will potentially bounce off there. We have a big long-term trend line as well. And if you get the daily fibs back up, we have the 61 fib of the dailies and the 50 fib of the dailies all in that area. So to me, even though, actually I'll just get rid of, sorry guys. Even though I think, price potentially may never get down there, if it does, that's a really good place to be going long. And that's always how I'm thinking. That would be buying low and potentially selling high. And especially if we're targeting right up here, again, that's a really, really fat risk to reward. When you're taking risk to rewards like this, you can afford to be wrong pretty often. So that's my thoughts on Bitcoin at the moment. The key takeaway there is nothing that I'm seeing is likely to come out over the next couple of days. So what am I doing? Am I trying to force a trade over the next couple of days? No. I am quite happy to sit on my hands and wait. Even though I think the most likely scenario is a bounce off that 4-hour EQ, I'm not taking longs off there. It doesn't suit my trade plan. I just find it a high risk, low opportunity trade. So yeah, I hope that this sort of shows you guys how I take those concepts and actually implement them in my trading, because I've done videos explaining them before, but to actually see it in action is probably a whole other thing. But that's pretty much all I wanted to talk about today. So yeah, hope you guys are all having a ripper start to your week, and I will talk to you guys very soon.